STOR Capital Stock, ticker symbol STOR. This stock is down almost 20% year to date, while the S&P 500 is down only 14% year to date. And they just released earnings. Next to that, STOR is loved because of the dividends. So what happened with the earnings? How about the dividends? And does the 20% drop year to date mean that STOR Capital stock is a buy? In this video I'm going to show real quickly the earnings report, what STOR Capital does, a view at the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does STOR Capital do? STOR Capital Corporation is a real estate investment trust involved in the acquisition and management of single-tenant operation real estate. STOR Capital primarily leases facilities at which a company operates its business and generates sales to middle market and large business through long-term agreements. Most of STOR's revenue come from its service sector customers, which includes notably restaurants, movie theaters, health clubs, early childhood education centers, and furniture stores. On the 3rd of August, STOR Capital presented quarterly results where they beat FFO, EPS, and revenue. So this looks good, right? Let's dive in the earnings itself to find out. Some key highlights in the presentation were revenue of $223 million, which is an increase of 16.5% year over year, and net income of $19.5 million, or $0.32 per share, including a net gain of $13.7 million. AFFO of $163 million, or $0.58 a share. And to me, this is one of the most important numbers here. They also declared a regular dividend of $0.38, which they easily can afford based on the FFO. So this is the first thing that comforts me a lot. They also invested $391 million in 62 properties at a weighted average initial cap rate of 7.2%. When we check the portfolio, we see that the lease expiring in the next 5 years is at only 4.4%, meaning more than 95% of the contracts won't expire within 5 years. So this looks also really good to me. And the average term is 13.2 years, excluding renewal options. When we dive in deeper, we see that STOR Capital has 579 customers with more than 3,000 investment property locations in 49 states. The customers operate in 124 different industries, so this looks very diversified to me. Occupancy is at 99%, so this looks also very good to me. Another great thing is the fact that STOR Capital raises the 2022 FFO guidance from a range of $2.2 to $2.23 a share to a range of $2.25 to $2.27 a share. So this looks really good to me, meaning it's expected that dividends are safe. The last thing that I want to mention is the fact that I really like the AFFO and FFFO growth year over year. It's growing really nice and steady, so this comforts me a lot, especially with the raised guidance for 2022. So earnings looks really great, but how about the historical returns? Let's see what happened there. I decided to include the S&P 500 as a benchmark, since this is one of the easiest way to invest. Just buy a market average ETF. Next to that, I included some major competitors such as FRT, Triple N, and Colt. On the 5-year chart, we see that STOR had a total return including dividends of 47%, which isn't a lot compared to the 83% return of the S&P 500. So you didn't beat the market average with owning STOR stock. FRT had a minus 4.8% return, Triple N had a 43% return, and Colt had a 96% return. The only one who beat in the S&P 500 in this list. On the 1-year chart, we see that STOR had a minus 20% return, while the S&P 500 had a minus 5% return. So again, you were better off with owning the S&P 500. But FRT is also down 9%, Triple N is nearly flat, and Colt is down 17%. On the 6-month chart, STOR had a minus 6% return, the S&P 500 a minus 7% return, FRT a minus 12% return, but Triple M had almost 10% return, and Colt has a almost 13% return. so that's quite the difference. On the 1 month chart, STOR had a 5% return, the S&P 500 a 8% return, FRT 9% return, NNN a 5.7% return, and Gold is nearly flat with a minus 1.6% return. So in all graphs, STOR did underperform the S&P 500. So does this mean that you shouldn't buy this stock? I don't think so. But the future may be very different, but it tells us a story. So let's continue by diving into the fundamentals to see if STOR stock is a buy based on the fundamentals. But first, if you made it this far in the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers. So help me achieving this huge milestone by giving me a subscribe. In return, you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. STOR Capital is a 7.6 billion market cap company with a PE ratio of 25. And since STOR is a REIT, this number is a bit different, so I'm not paying too much attention for now. 12 trading month revenue is at 822 million, and in this graph we see that it's going up quite nice and steady, except for the lockdown periods, which makes sense since they are heavily focused on the service industry. Net income is at 300 million, which gives us a profit margin of 36.5%, which is really high. And I really like this number, but this is also very typical for REITs in general. And keep in mind that the current profit margin is lower than the 5-year average, even when it's the tiniest bit. You don't want profit margin to go down further from here. Another typical thing for REITs are the lower return on assets and equity. So these numbers are below my 10% minimum, but it's very typical for this industry, so I don't think this is a big problem for now. The thing that I do like here is the fact that return on invested capital is significantly higher than the 5-year average, so this comforts me a lot. The next thing is the balance sheet. Right now, free cash flow is at 620 million, while debt is at 4.7 million, meaning they can't pay down a big chunk of the total debt. But again, this is very typical for this industry, so I don't worry that much. REITs use debt to grow the business, so that's why REITs have higher debt in general. As long as it's at a healthy level, I'm feeling comfortable, so for now, it looks okay to me. But it's very important that free cash flow is growing, since this is used to do acquisitions, buy back shares, pay down debt, pay dividends and all other things. Although dividends may be a bit different with REITs. And here we see the free cash flow is growing really nice and steady, so this comforts me a lot. In 2014 they only had 52 million in free cash flow. Right now it's at 620 million, so this looks really good to me. And with that being said, let's check the dividends. STOR Capital has a 5.5% dividend yield with an annual payout of $1.54 per share, or $0.39 each quarter. Since REITs use a different way of paying dividends, this payout ratio isn't correctly displayed. When we check the payout ratio breakdown, we see the payout ratio is at only 70% based on this year and next year estimates, so this looks really good to me. The 5-year growth rate is at 5.8%, which isn't the highest, but again, very typical for REITs in general. They grew the dividends for 6 years in a row. Overall, I think you've got a high dividend yield, which is growing a little bit and is well covered. So from a dividend perspective, I think this looks really good to me. The next part of this video will be about the fundamentals of STOR compared to some major competitors. Again, I included FRT, NNN and Gold. All similar companies based on market cap. We see that STOR and NNN have similar PE ratios, while FRT is much higher. Gold doesn't have a PE ratio right now. STOR has the highest 5-year revenue compound annual growth rate and also the highest net income compound annual growth rate. Free cash flow compound annual growth rate is also the highest at STOR, so to me they are definitely the winner here. STOR has the highest gross profit margin, but NNN has the highest net income margin. Return on equity is the highest at FRT, and return on assets is the highest at NNN. It's the same story with the return on invested capital. Last part will be about the dividends. STOR has the highest dividend yield and the highest dividend compound annual growth rate. FRT has the most consecutive years of dividend growth, but to me, STOR is still the winner here. Overall, I think STOR is one of the better REITs compared to the others, so I definitely like this part. The last part of this video will be about the price targets that I created using the Everything Money software, which is one of the best tools out there. Definitely check them out. So I'm filling in a low, mid and high assumption to see if they are a buy right now. But I have to say that it's a bit difficult to fill in these numbers, since STOR capital is a REIT. So please tell me your price targets as well in the comments. Let's start with revenue growth. I expect things to cool down a bit, since it will be harder to grow when the company becomes bigger and bigger. So I'm being a bit conservative with revenue growth and I'm aiming for 11, 12 and 13%. Profit margin I'm filling in 32% on the low assumption since margins are decreasing a little bit, 36% on the mid assumption which is around the current average, and I'm filling in 40% for the high assumptions. Free cash flow margin I'm filling in 40, 45 and 50. PE ratio I'm filling in 17, 18 and 19 since I want to pay a lower multiple here because I think it will be harder to grow the business. And price to free cash flow I'm filling in 12, 14 and 16. My desired annual return is 50% since I want to build in a margin of safety. I can get an easy 10% annual return with owning an ETF, so that's why I'm using 15% here. Right now, STOR stock is at $27.91 a share. I hit analyze and we do see some green numbers here. We have a low price target of $90 a share, a mid price target of $24 to $26 a share and a high price targets of $29 to $33 a share. And as I already said, it's a bit difficult using this tool with REITs, so it's more of a guideline for me. I do think STOR could be in the mid to high range with the price target, meaning $24 to $33 a share. My final conclusion is that I really like STOR capital. Right now I don't own any shares of STOR, but I did in the past. It was one of the better dividend stocks, but I sold because the stock went up a lot and I ensured my profits. For me, they were overvalued at that price. But with the stock coming down a lot in the past couple of months, it has my attention again. So for now, I do add STOR capital to my buy list, and when the time is right, I might buy the stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.